Imagine betting $5 billion on a single world-changing idea, one so huge that it could either redefine the future of artificial intelligence or go down as one of the most expensive lessons in business history. That's what Elon Musk is doing at this very moment. The man who disrupted cars, rockets, and social media is now leveraging massive debt to challenge not just his rivals, but the very limits of what artificial intelligence can become. Who else but Musk would dare such a gamble? But the real question is, will this daring leap lead to an AI-powered utopia or a financial catastrophe? Welcome to a story of high stakes, high-speed innovation, and a cloud of uncertainty hanging over one of the most ambitious technology bets of our time. Today, we're going to dive deep into the billion-dollar battle for AI dominance, exploring Musk's latest play, the risks he's stacking up, and the forces, regulatory, ethical, and economic, that could catapult XAI to legend status or bring it crashing down. Strap in, because this isn't just about technology. This is about money, power, and the future of humanity. To really understand what's at stake, we need to take a crash course on how artificial intelligence went from science fiction to the business world's hottest battleground, and why the size of Musk's bet is causing shockwaves across Wall Street and Silicon Valley. Let's rewind for just a moment. In the last decade, artificial intelligence has exploded in capability and importance. Algorithms can now learn, reason, and generate human-like responses. Machine learning models like OpenAI's GPT series and Google's Gemini are already rewriting the rules in everything from online search to customer service to creative work. But behind these headline-grabbing breakthroughs is something far less glamorous and far more expensive: infrastructure. The arms race for superior AI isn't just about having genius programmers or training clever models. It's also about building gigantic data centers packed with cutting-edge chips, specifically ultra-hot GPUs capable of crunching through mountains of data at record speeds. It's about global networks moving information in real time and software that can learn continuously from more and more up-to-date data. Every meaningful improvement in AI comes with a price tag that's measured not in millions, but in billions. It's here that Elon Musk's XAI enters the ring. Launched with a flair only Musk could muster, XAI was positioned as a bold alternative to OpenAI, Google, and the rest, driven by a mission to understand the universe. In just months, its valuation soared past a staggering $113 billion, fueled by frenzied investor demand. This enthusiasm has drawn comparisons to the dot-com bubble, but with one crucial difference: AI isn't just hype. The thing is, the costs are astronomical, and the risks existential. Musk's conviction is clear in his latest move. Exiting the political arena, he's now laser-focused on XAI's future, raising $5 billion through a complex mix of floating and fixed-rate loans, as well as senior secured notes brokered by Morgan Stanley. These are not vanilla loans. The floating-rate term loan carries an interest rate a full 7 percentage points above the market benchmark. The senior notes? Their yield is a jaw-dropping 12%. For context, that's more than double the yield on a typical corporate bond, essentially a loud signal that even the high-flying financial world sees this as a risk-laden adventure. But why is there so much appetite for risk? The answer lies in the sheer scale of what Musk is trying to build, and what investors stand to gain if he's right. At the heart of XAI's plan is Colossus, a mammoth data center in Memphis. Today, it already boasts 200,000 GPUs, according to Musk's own comments. The vision? Expand to more than 1 million units, creating what could be the single most powerful AI training site on the planet. This is not a minor step up, it's an order of magnitude leap. And if it works, XAI won't just compete in the AI space, it might dominate it. Gene Munster of Loop Ventures put it this way: if XAI can truly integrate real-time data at scale, it will have a significant competitive advantage. Everyone else will be playing catch-up. But as with every Musk endeavor, the headlines only tell half the story. There's more bubbling under the surface: legal skirmishes, regulatory uncertainties, and economic hurdles that could unravel even the grandest vision. First, the financial side. The $5 billion debt offering is just the latest in a series of hefty fundraisers across Musk's empire, including $650 million for Neuralink and a $300 million XAI stock sale. While appetite from investors seems insatiable right now, all this debt means gigantic interest payments and a mountain of pressure to deliver fast. Tony Sacconaghi, a tech analyst at Bernstein, offers a word of caution. If XAI fails to meet its growth targets, This level of debt could be disastrous. There's absolutely no room for error at this scale. That pressure is compounded by the pace of competition. OpenAI, Google, Amazon, Meta, all are pouring billions of their own into AI research, infrastructure, and talent. Meanwhile, hardware innovation is relentless. A single breakthrough, say a leap in chip efficiency, could change the game overnight, favoring whoever can adapt fastest. Musk may be building Colossus now, but will it still be cutting edge by the time all the debt is due? None of this is happening in a vacuum. The government is watching, and so is the public. XAI's ambitions go far beyond commercial products. Insider reports suggest the company is courting public sector contracts, hoping to apply its AI models to bureaucratic efficiency for governments worldwide. If this works, it could mean a stable revenue pipeline and a level of legitimacy few rivals can match. But it also opens XAI to intense scrutiny. Regulators, already scrambling to keep up with runaway AI advancements, may decide Musk's ambitions are moving too fast, especially when it comes to ethical issues. Dr. Clara Stein, a leading AI ethicist, warns, "The integration of advanced AI into social platforms like X raises deep concerns about bias, manipulation, and misinformation. The risks are not just technical, they're societal." It's not just ethical dilemmas looming. The value of XAI's signature AI model, Grok 3 Beta, is at stake. Supporters crow about its advantage. Training data updated as recently as February 2025 compared to GPT-4o's October 2023. In a field where information gets stale in weeks, that's a serious edge. Still, Grok faces a trademark dispute with Bisley AI Inc. over its very name, a legal snag that could slow product launches or even force a costly rebrand. In a sector where momentum is everything, delays are dangerous. Let's not forget the broader economy. While Dr. Paul Mason, an economist, predicts that new data centers could spark job creation and regional growth, he also acknowledges the flip side. Innovation at this scale almost always causes disruption. For every job XAI creates, others may disappear, especially in industries susceptible to automation. For now, the financial markets seem to believe in Musk's magic. His track record, SpaceX, Tesla, the X, formerly Twitter acquisition, proves he can swim in deep waters and come out, if not dry, at least richer and more influential. Bill Gurley, a venture capitalist at Benchmark, sums up the bull case. "You may think Elon takes insane risks, but he's made a career of beating the odds. I wouldn't bet against him." Yet the shadow of the Twitter acquisition still hangs over Morgan Stanley and the rest of Musk's financial backers. When they helped finance the $44 billion takeover in 2022, rapid decisions and business volatility left them stuck with $13 billion in risky debt for 2 years, eating into their own profits and underscoring the uncertainty that comes with betting big on Musk's vision. Can Musk keep the experts and investors on his side long enough to actually deliver? That's the trillion-dollar question this time. The answer will determine not just the fate of XAI, but the wider trajectory of artificial intelligence as an industry, and possibly the shape of society in the coming decades. So, as the June 17th debt commitment deadline closes in, the world is watching. Will XAI's vast bet on infrastructure pay off, giving it the data edge and the public contracts that Musk dreams of? Or will the weight of legal, financial, and ethical obstacles prove too much, turning this bold endeavor into a cautionary tale? After all, in the high-wire world of AI, even a serial winner like Musk is only ever a hair's breadth from the next big breakthrough, or the next big bust. What happens if Musk's gamble falters? What if the Colossus turns out to be a Colossus mistake, weighed down by debt, outpaced by rivals, or shackled by regulation? The answer to that may not just decide the fate of one company, but could set the stage for the entire future of artificial intelligence. Stay tuned. As the dust settles on Elon Musk's audacious $5 billion debt gamble for XAI, the tech world finds itself on the edge of its seat. Will this be a masterstroke that permanently reshapes artificial intelligence? Or is it the critical misstep that finally exposes the limits of Musk's luck? Let's fast forward into the possible futures now unfolding before our eyes. The bold scale of XAI's ambitions has split expert opinion. "We're witnessing a moonshot in real time," says Gene Munster of Loop Ventures. If XAI nails its real-time data advantage, the entire AI sector could pivot around its breakthrough. Yet it's not just Musk's daring that's on trial. The stakes now include a tug-of-war between limitless technological progress and the hard reality of debt, regulation, and public trust. Imagine the scenario everyone's hoping for. xAI's sprawling Colossus data center comes online, humming with over 1 million GPUs. The Grok 3 beta model, trained on fresher and broader datasets than any rival, launches to critical acclaim. Suddenly, Grok isn't just powering witty social media banter, it's driving enterprise solutions, government IT, and maybe even orchestrating improvements in urban planning and healthcare. Investors cheer as the company's $113 billion valuation looks like a bargain, and Musk manages to flip the $5 billion in debt into one of the greatest returns in corporate history. This isn't pure fantasy. xAI's data advantage, boasting training data as recent as February 2025, could make a tangible difference in sectors like financial markets, logistics, and customer service, where up-to-the-minute accuracy is everything. Governments, already experimenting with AI to cut bureaucracy, might hand xAI contracts that lock in stable, long-term revenue. For a moment, Musk's critics are silenced, and the gamble looks genius. But a darker alternate future is just as plausible, one littered with the wreckage of good intentions and overreaching ambition. The debt fueling xAI's expansion comes with a price: hefty interest payments and relentless growth targets. If the AI market cools, or if Grok stumbles in a publicized failure, a data breach, algorithmic bias scandal, or simple technical flop, investors could panic. Tech analyst Tony Sacconaghi sounds a warning. If xAI doesn't hit its aggressive milestones, $5 billion could become a millstone dragging the entire Musk empire down. Add to that a thicket of legal skirmishes and regulatory traps. The trademark dispute with Bisley AI over the Grok name is just the tip of the iceberg. Governments worldwide are scrambling to write AI regulations that work. Sarah Miller, a regulatory expert, paints a sobering picture. As AI gets embedded into everything from finance to healthcare, any misstep could lead to billion-dollar fines or even force parts of xAI to shut down. Even success comes with shadows. AI ethicist Dr. Clara Stein warns, integrating AI with social media like X brings enormous risk of bias and manipulation. If Grok supercharges the virality of misinformation, public backlash could force regulators' hands. Imagine a world where governments ban Grok from government use, or even mandate algorithmic transparency that dilutes xAI's competitive edge. And let's not forget the wild card: hardware. What if a competitor, perhaps Google or a stealth startup, leaps ahead with a new type of AI chip, making GPUs like those in Colossus obsolete overnight? Such a revolution could make xAI's debt-financed data center a relic before it pays off. Still, some see a middle path. Economist Dr. Paul Mason points out, even with risk, Musk's AI expansion will create jobs, not just in coding, but in data center operations, logistics, and security. Communities around Memphis could see lasting benefits no matter what happens to xAI's market share. So what can we learn from this crossroads of ambition and risk? How does the Musk xAI saga affect the average viewer, or anyone dreaming of launching their own moonshot? First and foremost, high reward rarely exists without high risk. Musk's willingness to take on enormous debt isn't just bravado. It's a calculated play based on his confidence in technology, execution, and, crucially, timing. For entrepreneurs and investors, the lesson is to understand not just the upside potential, but the downsides. How will you handle setbacks? Are your assumptions about market demand and regulatory acceptance realistic? Second, infrastructure matters. Much of xAI's value isn't in its software alone, but in the physical backbone: massive data centers, reliable GPUs, and up-to-date training data. In our world increasingly powered by algorithms, those who control the infrastructure have a decisive edge. Whether you're building a startup, a career, or even just investing, don't underestimate the power of owning, or at least accessing, the real pipes and wires of the digital economy. Third, ethical and legal awareness is now as critical as technical talent. The lines between competitive hustle and overstepping the law are blurrier than ever. From trademark fights to privacy risks, xAI's journey reveals that legal and regulatory teams must be as sharp as your coders. For anyone entering AI, understanding the shifting sands of ethics and law isn't optional, it's a survival skill. And then there's public trust. As AI systems like Grok get woven into the fabric of daily digital life, companies must balance innovation with transparency. Failures here can ruin reputations overnight. Remember, the same algorithms that power helpful suggestions can also amplify bias, spread misinformation, and erode democratic discourse. If you're building an AI, think deeply about not just what your technology can do, but what it should do. But perhaps the most practical takeaway is about the nature of moonshots themselves. Musk's bet on XAI encapsulates the paradox of innovation. Huge, risky investments are often necessary to achieve transformative breakthroughs. Yet those very bets can, and sometimes do, fail in spectacular fashion. The difference between legend and cautionary tale often comes down to execution, adaptability, and a little luck. So, where does this leave us? The answer to our opening question, will Musk's $5 billion gamble transform AI or collapse under its own weight, is still unwritten. But here's what we know. XAI is pushing boundaries. Whether it soars, stumbles, or settles somewhere in between, its journey is reshaping what's possible, not just for AI, but for every field that technology touches. And here's a secret fact that's not in the headlines. Musk's push for government efficiency contracts might quietly be the most important pillar of the entire strategy. If XAI can become the backbone of public sector automation, that steady revenue could shield it from the volatility of consumer markets and patch over a lot of risk. It's a classic Musk move, making the most daring bets behind the scenes while everyone watches the fireworks out front. For now, all eyes are on the rollout. If you're a tech enthusiast, business leader, or just an everyday user, keep watching XAI, not just for the next headline, but for the ripple effects on jobs, innovation, and even the rules that govern our digital future. Whether you see Musk as a visionary or a gambler, the scale and speed of his AI experiment will echo far beyond Silicon Valley. We'll keep tracking every twist in this high-wire story. If you found this analysis helpful, be sure to like, subscribe, and hit the bell so you never miss an update on the future of AI and the people bold enough to bet it all on tomorrow. Drop your thoughts in the comments. Would you take this kind of risk? Is Musk a genius, a gambler, or both? Let's debate.